Hey Joe, how you doing?
I'm okay, mate. I'm good. How are you doing?
Good lad. Yeah, I'm well. I'm very well actually. Very well. I'm a bit lost for days. I'm surprised today is Friday, just how this has come round. Just can't quite work it out. Strange, right?
It is so strange, isn't it? I almost was thinking getting prepared mentally for like another 2 work days.
Yeah, I know.
It's a weird one.
I know, it just all morphs into one. It's especially like, where it's just non-stop right now. Non-stop with all everything that's going on. I mean, dude, I say it all the time, broken record, but here he goes again. Another blinder of a week in terms of the moves, right?
Absolutely, mate. Literally, so good.
Really, really good. Yeah, I mean, we might as well start off with the dollar because the dollar's been the most sexiest thing to talk about right now. I was just, we're saying to the members, today could be the 9th session running in the red for the greenback.
Yeah.
Like, so much bloodshed. Yeah. Like, what's your take on it?
Yeah, I mean, there's just so many things, isn't there? Obviously, risk appetite. We've had massive risk appetite for another week. Huge gains in like stocks. AUD, NZD. Obviously, we always talk about it. Dollar is a safe haven, so it's been getting hit because of that. And just underlying the whole situation with the dollar is the Fed. Like, if you compare the rate at which they're basically printing money, the balance sheet's expanding. It's way faster than the BOJ, ECB, anybody. So it's just not good for the dollar.
It's very aggressive, and I saw a couple of the members this week. I think maybe Evans it was. They're just saying they're just going to keep doing more. They'll do as much as they need to. It's unlimited. Yeah. So yeah, you're right. Yeah. It's not good for the dollar. It's not. But what interests me at some point, though, is it not going to be a turning point and we look at it like, okay, the Fed, like we saw with the ECB, we'll leave the ECB for now, we'll come to that. But will we not get a point from the markets where like, okay, this is really reassuring from the FOMC now. They're doing everything possible to keep the economy propped up. Is this not a turning point for, okay, this is encouraging, let's buy the dollar now on that fact?
That's a really good point that I actually haven't really thought of yet. I mean, I guess at some point there's got to be.
Yeah.
That'll be interesting. I'm not sure, to be honest, I'm not sure when that point would be. I guess we're just going to have to see.
Yeah, exactly.
How the dollar is. Yeah, like maybe the way the dollar reacts to data might change in the coming months. And that'll be like a signal of like you say, this turning point. But yeah, I don't know really, to be honest, mate.
Indeed. It's all very much like the dollar there's no consistency with the dollar's mood and behaviour, how it reacts to data and QE and everything at the moment. It's just or risk appetite is very much just, with the risk appetite right now, it's just dump dollar. The dollar can't win at the moment. Even if the data's good for the US, it just can't win for now. So.
Yeah. And another big negative for the dollar that we forgot to just mention is the civil unrest that's been ongoing in the US as well. That's another big thing ever since the George Floyd thing.
Yeah, unfortunately so. And I think one of the key things, just from a market perspective as well, I think I was saying to the members was like, if you see Trump's seen as a dollar positive, and this surely the way in which some people have deemed him to have handled this situation not great, perhaps this harms his chances of re-election. At least makes a closer race, and he's seen as a dollar positive. So maybe that's in sort of markets' minds as well. Perhaps.
Yeah. No. That definitely. I hadn't looked at it from that angle, but that is actually a really good point. Yeah. Biden will probably be less dollar positive, won't he? Because he'll be softer on China, all that kind of stuff. Yeah. No, I agree with you on that one.
Yeah, indeed. So, yeah, that would be interesting. I mean, talking about just quickly going on to China, obviously, for the time being, markets have, pretty much swept that under the rug. Obviously, despite we've had little bits of bickering, conflicting reports about China not buying certain farm products, but then they are, and then the US banning airlines from China coming into the US. But then China, I was reading something this morning, that there was sources suggesting China were going to do the same thing to US airlines, but they backed down. They're like, do you know what? No, we're going to still allow US airlines for the time being. I guess they don't want to go there right now. They don't want to go there and start. No, it's in no one's interest to damage this phase 1 deal anyway. No one's interest, particularly Trump.
Yeah. Literally, because that was one of Trump's like crowning achievements, I guess, of the last year. So what he obviously he wants to escalate with China, but he doesn't want to threaten that phase 1 deal. Which hopefully, as far as like risk assets are concerned, like AUD and NZD, that should mean the downside is limited. Because as long as you got that phase 1 deal, surely things can't get too bad.
Agree with you there. I reckon though, Trump will wait for him to get re-elected, then he'll be on China again hard. Like, he'll come down hard on them. Phase one ripped up and everything. Oh, God. So,
knowing him, definitely.
Yeah. What else we had? Okay, so we've had that dollar weakness. We might as well talk about the ECB because, man, that triggered a huge move yesterday in the markets, stimulating more risk appetite led by the euro. Euro's been on some incredible moves this week, and to be honest, I don't even think there's really much of a sign of a slowdown for the time being. Some great gains. Like, give us some insight on the ECB yesterday. You covered that quite well for the members.
Yeah, I mean, ECB, really, really interesting meeting. So going into the meeting, markets were expecting a big increase to the ECB's QE program. And that is exactly what they got. They actually got an increase that was larger than expected. So the PEP, that's called Pandemic Emergency Purchase Program, was increased by $600 billion. Now it's in total $1.35 trillion.
Chunky.
Markets were expecting a $500 billion increase. And the key thing really is that the ECB have signalled that they are willing to continue to over-deliver to try and just iron out any possibility of another debt crisis, which is obviously a big risk for the euro. So it all contributes to that increasing optimism in the stability of the eurozone, which has been growing in the last couple of weeks.
Yeah, and I agree with you. And I think just so that some people don't get confused, something that obviously we've made clear anyway to the Freak Network guys is don't get confused, because QE in itself, as we know, it's a dovish thing to do. It's you're essentially diluting the market of euros. So it's typically speaking a euro negative. But obviously, as you say, in this time where they've really needed this stimulus, and it's something that to keep the block together, markets have taken this as a bullish thing. But in normal market conditions, if we're not in an economic crisis, then perhaps it's seen as a negative for the euro, right? This QE. So
absolutely. So absolutely, because it's almost like they're in the last couple of weeks or the last couple of months since there's been this pandemic, there's been a risk premium weighing on euro, and the risk premium has been growing risk that the eurozone is just going to fail and break up. So action from the ECB, all these proposals on the recovery fund, all of that reduces that risk premium and reduces that weight on euro.
Indeed.
So
yeah. Okay. And then still on a central bank dominated, we had the Bank of Canada, which I was I was quite surprised at. Obviously, we got the new governor. I think is it McKellen?
Macklem.
I
don't know.
Yeah, Macklem, something like that. He took over anyway, Stephen Polloz, and he seems like he's come in he's maybe a more neutral, more hawkish stance here, coming with a bang, making a scaling back in terms of the amount that they're pumping into the markets, more hawkish and positive for CAD, right? That move. Definitely.
And it wasn't just that, it was also, on top of that, it was their kind of outlook on the Canadian economy had got a lot more optimistic than it was in the last meeting. And that, to be fair, that isn't just Macklem. Polloz actually, in his last month of being in charge, he had become more optimistic as well. But yeah, definitely a bit of a surprise to the market, scaling back on those repo ops. Pretty much all the things they were saying about the economy were things are looking better. So yeah, definitely a big CAD positive it was on what day was it? Wednesday.
Yeah, Wednesday. That was it's all a blur. All a massive blur, dude.
Literally.
My goodness. Oh, we got some. I was just about to start talking about OPEC. We've got some OPEC comments coming down. Iraq, Nigeria to agree, improve compliance to OPEC cuts. Yeah, so obviously this has been a thing as well, right? OPEC. This was initially pumping oil. The expectation that Saudi and obviously Russia were to, extend the production cuts by at least sort of 1 to 2 months. And that had been supporting oil. But then we'd sort of come off a little bit because there was, we should have had that meeting on Thursday. So I think that's really key to drive oil further higher, right? We need that agreed.
Definitely. And like you just quoted those headlines, which are just coming down on my Twitter as well now. The issue which has been holding things up, that has been stopping that 1 to 2 month extension has been compliance. And two of the main culprits, you just named them, Iraq and Nigeria, because we had this compliance data for May that came out, I think it was the end of last week, and it showed that they only had 40% compliance. So
what?
Yeah,
That's mad.
I know. So so the Saudis and the Russians and the other OPEC guys not happy, and they're saying, listen, we're not doing anything unless you guys get in line.
That's it.
But by the looks of it, from these headlines that are just coming down, looks like they're falling in place. So that should be oil positive.
Should be oil positive, CAD positive. Yeah, definitely. Yeah, so it looks like they're going to extend that. Oh, yeah, agreeing in principle here. Nice, cool, positive for oil. All right, look, let's round off. I think I'm gonna let's sod Brexit for now. What are we looking for next week?
We've got the Fed on Wednesday.
Yeah.
Which, to be honest, it's going to be an interesting meeting, but I don't think it's going to be a massive market mover because there's not going to be any policy changes.
Yeah.
Just looking for a bit more information on like their outlook for the economy, like how optimistic or pessimistic are they, and also there's going to be a discussion about like forward guidance, like dot plot or yield curve control, but that's all a bit more technical and it's probably not going to move the market that much. Other than that, there's quite a lot of inflation data like US CPI, Chinese CPI, but should be more quiet on the data front next week.
Yeah, but themes will still be driving the markets for sure, without a shadow of doubt.
100%.
Always. All right, 100%. Cool. Well, another blessed week as always, keeping us busy and excited. Enjoy your weekend, dude.
Cheers, mate. You as well.
And let's stay lit, baby. Let's get it.